Hey everyone, I hope you're well. Today I have another exciting video to share with you. I completed trading Strangles on IWM for the past 12 months. In fact, I completed it back in May, but I haven't had the capacity to produce this video. So today I will show you what I did, the adjustments I made, and how much money this strategy generated for me and how much capital I needed to invest. So before we get into it, just a real quick brush up on what is a strangle. So strangle is a stock option strategy where you sell a put option as well as a call option at the same time, and what you're hoping to achieve is to keep your two strikes, the call and the put, on the two sides of the underlying. So in this instance, the IWM. Over the past 12 months, I had to make several adjustments, and the first adjustment I made was shortly after I opened the Strangles. So you can see that when I started trading Strangles on IWM, the IWM was trading around 175, and that was back in May, at the end of May 2022. You can see that my strangle was quite wide. My call side was on 195-ish and my put side was around 155. And when you trade strangles, all you got to do is just make adjustments depending on which way the price moves. So on the 31st of May, I rolled to the following month. I rolled out to the July expiration, and you can see that shortly after I did the roll, the stock market plummeted big time. So the IWM went from over 190 all the way down to 162-ish. That was a very, very rapid movement, and I was just following it with the call option. So every single time the market opened lower and closed lower, I just lowered my call strike and I kept my put strike at the same level. So at this point, you can see that my put strike was breached by IWM. Breached means the IWM price went below my put strike price, and that normally is a stressful period for options traders, but you just have to believe the statistics. You just have to stick with your strategy, and eventually things will work out. As you can see, IWM did bounce back, and when I rolled again to August on the 24th of June, then I was able to widen my strikes again. So let's move on to the next month, which is the next roll on the 28th of July. This was a relatively calm period. As you can see, there were only a couple of adjustments. In fact, there was only one adjustment throughout this period on the call side, and there were only two adjustments on the put side. So this was very, very nice. I was able to keep most of the premium and didn't have to make a lot of adjustments. However, as you can see, IWM bounced back and it did touch my call strike. So fortunately, it was time for me to roll to August and widen my strikes again. When do I roll it? Normally about 3 weeks away from expiration. That's when I tend to roll my positions. So you can see that IWM just kept on going up higher, and it went significantly above my call strike, and I just followed it with my put strike, and I ended up, for a period of time, I ended up with a straddle where your call strike and the put strike are at the same level. Fortunately, again, time always works in my favor. Time always works in the favor of options traders when they are selling options. So that was the case here as well, and I was able to widen my strikes again at the end of August. And basically, that's exactly what I did in the last 12 months. I just kept on following, if the share price went down, in this case IWM, if it went down, then I adjusted my call strikes down and kept my put strike stable. And if the IWM went up, then I did exactly the opposite. So as you can see, the first few months of this particular trade was very, very volatile. There was a lot of movement from 162-ish all the way up to over 200 and down and then back up again. So it was a roller coaster ride, and I had to make quite a few adjustments just to stay on top of this strategy. And then in the last couple of months of the year, finally IWM calmed down and I didn't have to make that many adjustments. As you can see, the range was much narrower between 170 and 190. And of course, every single month, as you can see, I just kept on widening my strikes and collect additional premium. And that's basically how I ended up trading IWM Strangles for the past 12 months. And now let's take a look at what my position looked like and how much premium I collected. And also we're going to compare it to the movement of the underlying, in this case, IWM. On the 31st of May, I did my first roll to July expiration. Initially, I collected $160 premium, and with the roll out a month, I was able to add an extra $138 to my premium. Because I want to keep this video relatively short, I'm not going to show you every single time I collected premium and how much premium I collected. I'm just going to highlight some of the key parts. So for example, over here, the red line indicates the premium that I collected. And you can see that I was going up and up and up. That means I collected a lot of premium. But then at this point, my premium dropped significantly. That's because if you look at the blue dotted line and the brown dotted line, they were at the same level. That's what I mentioned before, that my call and my put strike were at the same level. That's called a straddle. And the market was very volatile. So at that point, I decided I want to go wide with my strangle, and I rather sacrifice some of the premium that I collected and establish a safer position. So that's exactly what I did. And then unfortunately, a couple of months later, I had to do pretty much the same thing. I just kept on collecting premium, but then my put strike was breached, so I needed to sacrifice once again a fair bit of my premium. So if you look at this period, I didn't make any money. There was no movement whatsoever, because at this point around mid-November, I had more or less the same amount of premium as what I had back in early August. So that period was pretty much a write-off. But then, fortunately, things turned positive for me and the market calmed down and I was able to keep accumulating premium. And in the end, I was able to collect over $1,800 premium trading Strangles. When you're talking about collecting premiums, you also have to look at the other side of the equation, which is how much capital you require, because anybody can tell you that, yeah, they collected $2,000 premium, but how much is that? You know, if you invest $2,000 and you collect $2,000 premium over 12 months, then you basically doubled your money. So that's a brilliant return. But if you collected $2,000 and you invested $10,000, then your return is not that good. It's still great, but it's not as good as if you doubled your money. So on the bottom of this slide, you can see the total capital that was required throughout these past 12 months. Obviously, it fluctuates because every single time you roll to the next month and you widen your strikes, then your capital requirement goes down because your risk goes down. And so that's why it's fluctuating. But you can see that more or less around the $2,800. That's the medium. But sometimes it went up to about $4,000. And other times it was as low as $1,800. So when you want to trade Strangles on IWM, then you gotta be prepared to have at least, I would say, $5,500 in your trading account. Otherwise, you're at risk of margin calls. So let's look at the top line, because I'm pretty sure that this is more interesting for most people than looking at charts. As you can see, I did 70 trades over the past 365 days. That works out to be just over one trade a week, and the total profit that this strategy generated on IWM for me was $1,534. So if we look at the average capital required, which was just under 3,000, then the ROI is 52.4%. So that's a tremendous return. However, like I mentioned, in some instances, I needed to have more capital against this particular position. My max capital was $4,000. And if we look at $4,000 as a capital required for this particular position throughout the past 365 days, then the return would have been 38.3%, which is still a phenomenal return if you think about it. Now, during that same period, because you always want to also compare your performance against the overall market. So SPY or SPX for some is pretty much the market indicator, and during that period the SPY went up by 4.3%, and the QQQ, which is the Nasdaq, went up by 16.1%. So obviously Nasdaq outperformed SPY, the overall market, quite heavily, but it was still significantly below the performance of my strangle strategy against IWM. It's a relatively low risk strategy, and it can produce really hefty returns. Now obviously I need to admit that last year was an extraordinary year in a sense that the first 8 months of the year was very volatile. The volatility was high. The IVR was high, and when the IVR and the volatility are high, then you can collect more premium. So I continue trading IWM strangles, and it will be very interesting to see next year when I do my video how the second year performs. So keep your eyes out for that video. Obviously it's going to be about 10-11 months away. But if you subscribe, then you will be notified. So I encourage you to subscribe to my channel, and then you won't miss that video. I also like to play with numbers a little bit. You can see over here on the bottom, the initial investment is $10,000, and let's say you produce 38.3% return year on year, every single year, then your capital in 10 years grows to $255,000. So that just gives you a little bit better understanding of what 38.3% return is and what it can do to your portfolio if you manage to produce that kind of result year on year. I really hope you enjoyed this video. I hope you find it beneficial. I hope you find it inspirational. If you want to learn more about trading, then feel free to reach out to me. I would love to hear your comment, your feedback in the comment section as well. Like I mentioned, I continue trading strangles on IWM, on QQQ, on SPY. I also do it on TLT, which is the bond ETF, and it's quite exciting to see how they perform and how you can produce significant return using these simple strategies like strangles. You just really have to be mindful of making sure not to overcommit and not to stress your account and stress yourself. Because I completed 365 days of trading QQQ, SPY, and IWM, I now have the results. If you want to go ahead, you can watch the other videos on SPY and QQQ, exactly the same video with a little bit more detail, and they're a little bit more lengthier as well. But I will create another video where I will just talk about the comparison of these three underlyings or trading strangles on these three underlyings. I hope you find this useful. Hit the like button, spread the word, and help others to build wealth as well using stock options. Take care, everyone. I'll see you on the next video.